Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Really excited for today's show. We've got Michael Rebelo with us. So, Michael, welcome to the show today.
Yeah, it's always a pleasure.
Awesome. Well, good having you on. I've seen you all over social media, so you're doing something well, at least one thing well. But yeah, excited to hear, what's happened with your multifamily since we last talked. So let's rewind the clock and let's just have you talk about your background and then kind of tell us a tale about you and then how you got into multifamily.
In high school, I forget which year this was. I think I was a junior at the time. I've always had the entrepreneurial grit. I was taking business and finance, entrepreneurship, marketing, those courses. They were selective.
Yep.
And I was like, this just fascinates me. I'm currently 20 years old.
Okay. So for the listeners, he's talking about high school because it was a couple of years ago, right? So 20 years old. Now that we have that context, keep going. And so, if I talk about high school, I hate to say it, it's 30 something years ago. But anyway, keep going. Entrepreneurship classes, really, really spoke to you. Go ahead.
I would say the concept behind it, where you could actually invest money and actually have it grow for you and have passive income. And I was learning at like the very, very, very top surface level. I mean, dust on top. And later I was still researching. I was going to invest in the stock market. Didn't know when I'll have the time to sit down. So transition and moving on to my junior year, this is when I really started to put the foot to the floor with investing in the stock market, the S&P 500, oil stocks, oil drilling companies, airline companies, everything that I was familiar with. And so I started. I was playing the stock market game in class. And then summer break hits, and then my mother comes home and she was like, hey, we need to talk. And I'm thinking, that's not good.
Yeah.
With me being a teenage boy, I'm like, that's not good.
Yeah.
What did I do wrong? But anyway, moving on to that, she was like, we need to talk about the current family investments, and I need to teach you about compound interest, IRA, and the 2008 crash and why that's so important. So I'm 17. I don't really have like a full-time W-2, and I need to learn about this now. I'm like, I thought the companies would handle that. Like, I thought this was worry-free. So she was walking me through this, and it was a very harsh reality at a young age for me to go, oh my God, we need to do something about this. We were getting pennies on the dollar for returns on our CDs, on my mom's 401k, my grandparents' IRA, my mom's IRA. It was appalling to the point where, okay, what do I do about this? Light bulb goes off in my head. I'm like, oh, I'm learning about the stock market and how to invest my capital into Wall Street. And me and my mom, we kind of had an agreement where it was like, all right, I'm going to lend you $500 of play money. Let's see what you can do with this. I'm like, I'm over here thinking I'm the next Charlie Munger, Warren Buffett. Right?
Oh, yeah.
BlackRock and everything.
You're thinking you're going to turn that 500 into $1 million in like 3 weeks.
Absolutely. That was the mentality I had. And Brian, I kid you not, I probably wasted 3 years of I life just by looking at Bloomberg, Yahoo Finance, and the Schwab Network. Using the ticker symbol, buy, sell. It wasn't scalable at all. And I was just reaching burnout. And I looked at the amount of money I made and I was like, that's not going to cut it.
Yeah.
That's not even anywhere near close to what I would think it would be. So we pulled out of that. So we went to the drawing board. We have this notebook. We still have this notebook still. I wish I had it with next to me. And we sat down and tried to figure out where could we put our money so it could make money for us, so we don't have to work for it. We thought of everything from single family to fix and flips, short-term rentals, different commodities, energy. And we just try to think about these things. But every time we would get across something, it would either be 506C, so we didn't get in there because we're not accredited yet. And then just a couple of different factors that didn't make sense. We're like, okay.
Yeah.
But the one thing that we could do was real estate. All sides of the family has done real estate before, but like mainly construction, renting out duplexes, triplexes, and stuff. And I'm like, we don't want to be actively managing something. And my mother told me, she's like, we're not doing a townhouse because I'm not leaving this house. I have a beautiful house. I'm not leaving it. I'm like, okay. So then an ad came across our feed, something called multifamily investing. And something that always lingered in the back of our heads. We see these big apartment complexes on the side of the highway and, off of exit 28, and you see them everywhere. Who owns them? And I don't think it's like Vanguard or like Fidelity or BlackRock for like their investments or like institutional investors.
They own some of them. Yeah, but not all. Yeah.
Thank God they don't know all of it. But anyway, we started to learn that, wait, we could own them. Now I'm thinking this is hogwash. And we both felt the same thing. So we went to just a free seminar. And we figured out that we could do something called a syndication, where you and I, mom, we could pull our money together. We could purchase an apartment complex, syndicate it together, and then bring in more investors, bring in some partners, all in for 3 to 5 years, get that piece of the rent, and then sell it off for a chunk of money. I was like, we could do that.
Yeah.
I don't know how we're going to do it, but we're going to do that.
Yeah.
Small plug, we went with the multifamily mindset course because that was like one of the first ads that came up. And we just learned through their network and their program and tried to and figured out that, wow, we could do this. So we tried that for a little bit. Problem is, we were still in Massachusetts at the time, so this personal part ties into the business aspect. When I graduated high school, I skipped college so I could do this full time because I saw the immense value it can create. And I'm like, I could teach this, I could share it to my peers, I could share it to other family members, and maybe we could build financial freedom together. Thing is, we're moving from Massachusetts to Tucson and then graduating and then back in the house. We lost so much momentum. And it was to the point where a little over a year ago, we had a conversation of maybe we might shut this down because all we did was learn, but life and conflicts got in the way where we couldn't execute on that learning. And we weren't bringing the income needed. So we're like, maybe we should just shut this down because it feels more like a hobby than more than anything. I'm like, no, we're going to go full bore into this because we built this company, we've come this far, and there's a reason why we're doing it. We're going to fulfill it. So through 2025, we buckled down and we just started to do things like, wholesaling. We tried wholesaling for a little bit, like single family homes and stuff like that. Maybe some apartment complex to at least get some income in. That failed. So we're like, that's it. We're drawing the line. We're going straight to multifamily. We did it. And then around March, April, we joined. Now we're, I think, what is it called? Our Oxford Point. With Michelle and Cindy Harding. We're working with them and their team. And it's 152 units. Like, we did that. We're on that deal. It's like, wow. And then also I was like, okay, what's the next deal? It was like this high, this thrill of the hunt. And recently we closed on 64 units in Tulsa, Oklahoma. Other people that we met through other networks. And we realized that this is proof of concept. This could be done. Present day, it's like, all right, where's the next deal? What's the next thing? That's where Mom and I are at right now. And that's the lineage or genealogy of the story that brought me to where I am today.
Awesome. Well, let's talk a little bit about these deals. What was your guys' principal role in the deal?
Great questions. The principal role, we actually couldn't figure that out before this deal, the first deal, which is 152 units. And I was trying to figure out, what did I want to do? I wanted to be chief cook and bottle washer. I wanted to learn the asset management. I want to learn the acquisitions, the capital raising.
A lot of people do up front.
I agree. It's like, I want to do everything. If I could just do this on my own, that'd be great. But what a dumb move. I'm like, oh my God, I'm wasting so much time. But someone came to me and said, listen, you're very active online. You're great with networking. You're a capital raiser. I'm like, I don't know how to raise capital. I want to raise capital. I sound like a beggar. I feel like I'm asking, hey, do you have some money laying around so you can invest with me? I'm like, no, you're just presenting an opportunity. It took me a while to figure out this mindset shift. But then we were offered to, raise capital on this, on Oxford Point, this deal. I looked at Mom like, we don't know how to raise for capital, but the best way to learn real estate is to do real estate.
To do it. Yeah, I love that attitude, by the way. I mean, there's a lot of people out there that'll sit and think and plan about it for like 4, 5, 6 years and never do anything. And you just jumped in.
We just jumped in.
Good for you. Yeah. So let me ask you a couple of questions, because a lot of people are a little bit hesitant to raise capital. What were some of the challenges you guys had, starting to raise capital for someone else's deal?
It's a very strong and legitimate concern and hesitation. Capital raising. Because, you are legit raising capital. You're raising 50,000, 100,000, 500,000. You're raising thousands and thousands of dollars of people's hard-earned money. You better know how to put it correctly and how to manage it correctly.
And for the record, I had similar feelings starting out, and I didn't want to raise capital for the first couple of deals. But go back to you now.
And I was very hesitant because I had this feeling like I'm asking people for my like a beggar. Like, I have some capital left to spare. But I'm like, no, hold on. Like, I'm the one in this business because this is my pain point. Half my mother's accounts tank. So they must have some similar pain points as well. So it was like this mindset shift where I wasn't raising capital I was raising awareness about these deals where it's like,
Mhm.
hey, did you know you can invest in apartment buildings? I'm like, yeah, you can. And it was just to be a steward of capital, a steward of investors, and great opportunities for people to learn and grow, not
Yeah.
just grow personally, but to grow financially outside the traditional playbook. I'm like, I have to talk about this. It's like just
Yeah.
mindset blown. I was like, wow. So that's the shift that I had where it's like,
Mhm.
I wasn't a beggar. I wasn't, your cheap salesman that's
Mhm.
like goes door to door. I'm like, listen, I have an opportunity that you need to invest in because you need more time with your family or you're getting burned out by a W-2. This can help with that. Give me a call. And that was like it. It was like this mindset shift. So
Yeah.
that's
You know, and
that's the hesitation. That's how you overcome it.
you're so far ahead of where I was. I mean, for me raising for my first deal, and by the way, it was a deal that I found, I underwrote, I put under contract, and I found a couple people to help me, but I felt like I was asking people for money, right? And one of the triggers for me was I talked with somebody who had never understood the syndication before. And, we get on a call. He's asking a lot of questions. And he's like, yeah, I want to invest. And then at the end of the call, he thanked me. He's like, thanks so much. I never knew of this existed. I'm so excited to have learned about this. And that call was one of those little triggers for me where I realized I have something that other people want. And that was my mindset shift between going out and asking people for money and, giving them an opportunity that they're going to want. And so it's true that, you go out, you teach people about stuff, you raise their awareness about stuff, you make them see something they haven't seen before. And a lot of people are going to be very, very happy after learning about that to, open up their wallets or checkbooks and I know people don't physically write checks anymore, but you get the idea. But yeah, so glad you had that realization so early on. It took me a long time to get there myself. You started with social media campaign, like raising awareness on social media. What did you guys do specifically to be able to find people? Did you look at just friends and family? How were you finding the people that invested in your first couple of deals you've done?
That's a great question. How did I find investors for that first deal? Was it friends and family?
Yeah.
So actually, I tried that. And so when we moved here, we're very active. We're very vocal. And we
Mhm.
love to meet neighbors. And, we stay in touch with friends and family as much as we can.
Mhm.
Some of our neighbors were like, hey, yeah, we want to get into real estate. Okay.
Mhm.
And we have been around them long enough that we could actually present them an opportunity. We've gone on
Mhm.
tens of hikes.
Yeah.
I've been out to dinner and everything. We've done social gatherings. So it's like, okay, I know who you are. Like, listen, we're actually raising for this deal. And I'm
Mhm.
like, yeah, I want a piece of that because they've always wanted to do it passively. They didn't want to do it actively.
Yeah.
And we had that opportunity. Then we had some other neighbors that are like, we've been burned by some of these opportunities in the past. We're going to pass. Fair enough. But
Yeah.
now I'm going to go back to them and say, okay, why? Walk me through this because I
Mhm.
want to learn as well.
Yeah.
Other neighbors were like, our 401k is good. It's nice and steady. We don't need anything else. We're just good, laid back. I'm like, that's fine.
Mhm.
But then what happened was I was in all these networks and, I'm talking to people left and right and I'm networking as much as possible. I'm like, well, what about them? What are they up to? So I just started to reach out to these people and everything. And this is when the deal was in 506B.
Mhm.
And some people moved, some people didn't.
Mhm.
But it really wasn't a lot of friends and family. It was just people in the network. Of course,
Mhm.
provided SEC regulations, I did have relationships with these people.
Yeah.
But once the deal transferred over to 506C, I was talking to people left and right because I realized that I could just go off the hook and just keep talking about this as
Mhm.
long as they're accredited.
Yeah.
And I was speaking on a panel in Scottsdale for a business convention. And one of the speakers there was a game show host. And he's great. And he's one of my investors right now.
Mhm.
And we were talking and he was like, you do what now? I'm
Mhm.
like, yeah, mom and I, we invest in multifamily apartment complexes. We're
Yeah.
usually the partners and you just sit back and enjoy the returns. And he's like, I have a lot of single family homes or rehab homes. And I've always wanted to do something like that, to put money away. He's like, I have no idea how to do that, but I would love to learn from you guys. I'm like, absolutely. So to kind of summarize this,
Mhm.
we went to friends and family. They were fine. Some
Mhm.
of them did invest with us. Some of them didn't.
Mhm.
But then we also went to our network, our business network, and a lot of people started to move
Mhm.
because they're like, they already knew the concept, but I guess it was the way that we presented it. And I
Mhm.
guess it was the hook that was there. Like, you need to invest. It's not a want. This is a need.
Yeah.
You need to put money away. And a lot of people just said, keep me in touch for future opportunities. And that's what we've been doing.
Yeah. So when you tell somebody that they need to invest, what reasons are you using to back that up? What's resonating with the people that you're talking with?
Great question. So I'm kind of stealing some concepts from How to Win Friends and Influence Others by Dale Carnegie.
Yep.
And what helped me a lot about these prospects, I guess you could say, was just listening to them. What kind of business do they have? Are they cash heavy? Could be. You had some people that had single family homes and they're like, we're just managing this left and right. I'm like, well, where are you investing? Well, usually we're investing back in the single family. I'm like, why don't you have your money work for you? And they're like, well, what do you mean? Well, you guys do single families. You can do BRRRR methods, fix and flips. But what we do, you see that apartment complex across the street? Yeah. We invest in those. You can passively. And they're like, you can? You have to teach me. So we walked them through the pitch deck and we basically broke it down as simple as we can to say, when you invest your money into this deal, this is how it operates and this is how you get the returns that you deserve. And they're like, that makes sense. How come nobody's talked about this? I'm like, because they don't want you to talk about it.
Yeah.
Because they want to keep it for themselves. That's why. And I'm like, this just makes me nuts. So it's coming from the position of, I have to listen to see, okay, is there a need? Because it should, if they want to invest, by all means, but what is their need? Because if I can identify the motivation and maybe help them out some way, shape, or form, maybe it's time with their family, I'm going to help them and tell them, listen, if you want time with your family, you need to invest in this because stop working for the dollar should be working for you. So that's kind of where I talk about people needing to invest.
Yeah, I love it. And for people listening, that was gold right there. Absolute gold. I mean, essentially what you're doing is you're making it personal for them.
Absolutely.
You're basically telling them, you're getting to know them, what their triggers are, what they're looking for, and then you reframe this opportunity as how to help them get what they want. That is one of the biggest keys to raising capital, is to be able to frame things in a way to help other people get what they want. And you brought in Dale Carnegie. I'm going to bring in Zig Ziglar. One of his quotes is, you can have anything, I'm paraphrasing, you can get anything you want in this world if you help enough other people get what they want. And so
100%.
and so when you start looking at applying that to capital raising, you've got to put it in terms that make them see how they are going to benefit. What doesn't work, and I've tried this before, is, hey, I want you to invest so that I can make money and I can reach my financial goals. No one's investing if you do that, right? But if you can turn it around and say, this is going to help you get exactly what you want, now you've positioned it into a place that people are going to listen. So,
100%.
and they're going to open their checkbooks again. So there we go. Awesome. So what you're talking about, was that mostly you said you've done 2 deals this year. How did you approach the second deal differently, having already raised money for one?
So for those that are listening on as well, Brian, you and I know this, but there's something called the law of the first deal. The first deal is going to be the hardest, especially when it comes to acquiring it, raising it, and then getting people to sign on it and then managing it. It's going to be the hardest, guaranteed. But then the second deal that we did, it was a lot easier. So again, it was very much the same system where the first deal we did, we had the team reach out to us and say, hey, would you guys like to raise capital for us? And we're like, sure.
Yeah.
And we knew the team. We loved the team. We love how they operate. And we just dove head first. And we knew exactly how to do it because we remembered the mistakes and the flaws we did on the last deal and the things we learned. On every deal, it's not going to be perfect, but you're going to learn something new. And that's what we did, is we took, the things that we learned from the first deal and the mistakes and the lessons, and we applied it to the next deal. And we actually got a serious amount of traction. The only reason why people didn't budge is either because they were liquid or there's life events or they've already invested in a deal, which is fine.
Yeah.
I respect that. If you are investing, I want that. Whether it's in my deal or someone else's deal, I want you to invest. So we went in with more confidence, with more clarity. And I feel like we got a lot more out of this deal because we just took those lessons and mistakes. We didn't mopey dopey about it. We were just like, all right, how do we act on it for the next deal? Because we know the next one's coming right around the corner. And by God's good grace, it did. So the next deal, or the deal we just closed on, was a lot easier than the first one, just because of the lessons we learned.
Yeah. Yeah. And I love that law of the first deal. I remember it worked with us. I mean, it took me over, probably 2 years of actively looking to get the first deal closed. And we closed on deal number 2 3 months later. My opinion is it moves you in other people's heads as well, from pretenders to actual players. And
I
those are
love
my
that.
words. Yeah. But, I was having a tough time with brokers because we talk with a broker, and this is 2018. Right now brokers are so hungry they'll talk with anybody. Once I closed on my first deal, brokers were calling me. That was the big difference in my mindset. On the capital raise side, it was still aspirational on my first deal, because a lot of people would ask me, how many times have you done this before? Well, this is my first time. Once I was able to show people, hey, we successfully closed on a deal, which is kind of crazy, and I'll explain why in a second. But once we show people we've successfully closed on a deal, now people who passed on deal number 1 were jumping into deal number 2. That was my experience with it anyway. But why do I think that's crazy? Well, closing on the deal is, just the first step in the investment. If people are going to invest with me because I've closed on a deal, I'll let them all day long. But anyway.
Yeah, same here.
Yeah, right. So there is a difference between somebody who can close and somebody who can't. And I guess from that perspective, it makes sense that, people, okay, he's actually closed on a deal. Because I guess one of the biggest risks to the investor is, what if I give them the money and they run away? I've had people ask me that before. But well, cool. So yeah, 20 years old right now. You've been in 2 syndications. I guess wrapping up, what's next for you?
Well, that's a great question.
Yeah.
So, just to give you kind of an insight to my head, but if I were to give you the full insight, we'd be here for another 6 hours. But in all honesty, I think I want to stick with multifamily because,
Yeah.
one, not just for the familiar aspect of it, but also number two, it makes sense. It's a proven process. It's a proven method. And yeah, absolutely. Is the market going to tank every once in a while? Yeah. I mean, look at the stock market, and people
Yeah.
still invest in the stock market thinking, oh, it's going to make me, financially free. No, it isn't. You're just going to get more stressed. But I think what I'm going to do next is start to diversify into energies like, oil, maybe solar,
Yeah.
and then maybe commodities like gold and silver. I have a silver coin, and I'm just watching silver just keep going up and up and up and up, and gold is
$80
going
an
up.
ounce. That's more. Yeah. Wow.
Yeah, it's like
My goodness.
insane. And
Yeah.
so I love to diversify. I love to learn new things. It's
Mhm.
like almost like the thrill of the hunt, the adrenaline.
Yeah.
It's like, okay, what's the next investment for me?
Mhm.
I love multifamily. I'm going to stick with it. And then just teaching people along the way, teaching investors, teaching general partners, and then those that want to get into the industry. I'm happy to. I'm an open book. So that's what's next for me.
Yeah, awesome. And just me talking to the listeners here, if you are good at raising capital, you have all of those options. I've said this multiple times. The number one most important skill you can have in this industry is raising capital, but it transfers very well to, everything else, every other investment. So next question for you, Michael. If you had to give advice to somebody who is just starting out, what would that advice be?
Love that question. So for someone that's just starting out, follow the operators online that are actually making a difference in the industry. Like, for example, people like me, people like Brian, other big sponsors out there that are actually talking about multifamily day to day. Like, they're actually in it. They're not just saying, oh, this is great. And no, they're going to tell you the truth because they've got a proven track record. They know exactly how the market's going to tick or if it's going to tip next year. Just look up multifamily real estate investors, multifamily general partners, multifamily deals online, and just start following people. Join a mentorship program as well.
Yeah.
Go be taught under a mentor. Read books, take notes. And then when you take notes and we learn all of these things and follow these people, don't just have a notebook about yay high. Actually take it, run with it, and take action. Because knowledge is nothing without action. So just go do it.
Yeah. Just do it. The good old Nike philosophy.
That's
Just
right.
do it. And then I mean, other things that you said, get a mentor. That was the hockey stick moment in my growth. That's like the pivot point for me was getting the mentor on that one. Or find the people online, listen to them, follow them. Lots of good advice to unpack there. Last question: how can listeners learn more about you?
Love that. So if you want to learn more about me, my company, my social media as well, and what's next for me, you can visit us at www.everforwardcapitalpartners.com. To get in touch with us, you can go to our contact page and learn more about us and our deals. Feel free to browse and then just, research us. We're an open book. Follow us on social media as well. Give us a shout.
Awesome. All right. Thanks for coming on the show today. And for everybody listening, the link that he gave out, we'll have all of that in the show notes. Make sure you check the show notes for information about this as well. But definitely reach out to him if you've got any questions or want to chat. That said, Michael, thanks for coming on the show today. Very much appreciate it.
Brian, it was a pleasure. Thank you so much.